Hey, good morning, everyone. We will make a start. Thank you for joining me on this webinar this morning, which is Flex EIS, you can see on screen and as part of your registration to this. So what we'll be focusing on today, which I'll go into much more detail, is a method of contributing towards EIS investing on a monthly basis. Now, today's session will last no longer than 45 minutes and a CPD certificate will be sent to all attendees within 48 hours. And if you have any questions as we go through, please, there should be a Q&A functionality, I believe, for you. So if it's not available, please send your questions to us afterwards. But I will endeavour to answer them either as I go or towards the end of this webinar. And just before we go into it, of course, didn't really introduce myself. I'm Steve Powell. It probably comes up on your screen as Deepbridge Capital, which that is not my name. I'm Stephen Powell, the Sales Director for London and South East here at Deepbridge. So before we go into the full detail, as with all webinars, I need to give a compliance legal slide from our perspective. So Deepbridge Capital LLP is authorised and regulated by the FCA. This webinar is for financial advisors only, and what I'm going to be discussing today are deemed high-risk investments, of course EIS investments, and suitability should be undertaken before recommending such products. Tax rates discussed in this webinar will be correct as of the time of this webinar, and neither myself nor Deepbridge provide taxation advice. So let's get to the learning objectives as part of the CPD. As I said, that will be given to everyone within 48 hours of this webinar finishing. So we'll start by explaining what Flex EIS is, why we have introduced it, as it's new to the market, who are ideal clients, and I've got a case study to go through as well, the key benefits, and of course, how to actually make the investment and what that entails. So introducing Flex EIS, Smart Wealth Planning, as we've branded it. So what is Flex EIS? It is a revolutionary approach, as we've deemed it, for UK financial advisors, enabling appropriate investors to benefit from the generous tax reliefs of EIS on an ongoing basis rather than a traditional lump sum commitment. So unlike the traditional approach that advisors have been, only available to advisors over the years of making a lump sum typically once a year for an investor, we have introduced this to allow investors to actually access this on a monthly ongoing basis. So breaking up their contributions or payments towards an EIS, instead of doing it just as a lump sum once a year, they can do it over the course of 12 months. So we believe that Flex will hopefully transform the EIS investing from that once a year thought right into the tax year, where you as financial advisors are stressed anyway, I'm sure, with everything towards tax year end, but also a client coming to you at the last minute saying, I wish to make an EIS investment at the 11th hour. And then you're then scrabbling around finding which EIS funds are available, which are open, which are deploying this tax year because my client wants carry back. So we've introduced Flex EIS as, I guess, a proactive method for investors to not do that to you as financial advisors and break their payments up or contributions over the course of a whole tax year. So how do we offer this? Because our model, and those of you on this webinar that have got working relationship with us, you'll be aware that we've got two EIS funds of Technology Growth EIS and Life Sciences EIS. And I'll go into detail about what Flex EIS is because it's not a separate EIS fund in itself. It is a different method of accessing the two funds that I've just mentioned there. So because our model and USP to the market is that we deploy capital on a monthly basis, being the quickest providers on the market to deploy capital, this allows us to actually offer this solution. So this Flex EIS method is unique to us. You will not find this with any other provider on the market. So that puts us in quite a strong position for forward-thinking financial planning and hopefully us working together going forward as a working relationship. So by adopting a monthly investment structure, Flex EIS helps build a diversified portfolio by investments and deployments throughout the tax year, which I'll come on to, reducing the timing risk that I mentioned right at the end of the tax year, and ensure consistent investment in high potential companies throughout that course of the whole year. And yeah, it's a proactive method of investing into EIS, which you probably gathered from that. So we see this as an opportunity to be at the forefront of financial planning. If investors can make monthly contributions to pensions, to ISAs, to GIAs, why not be able to do it with EIS? This is again another reason why we have brought this to market. So I've given you a brief overview as to what Flex EIS is, I just want to take a step back, if I may, because I appreciate on this webinar there may be people of say new, if you like, to EIS, or some, of course, highly experienced. I won't go into too much detail today or put too much time on this. I'll just give a quick minute, 60 seconds, if I may, just on firstly a change to the market, and also just to cover and recap on the tax reliefs available to investors through EIS. So hopefully you can see my laser pointer. So a big advantage to EIS from this tax year going forward is the tax relief has dropped for VCT. Now, that still remains a viable option to investors for a diversified portfolio, slightly later stage companies, but of course the tax relief, as you can see now, is only 20% for the income tax relief on the way in. Now, with EIS, it remains at 30%, and then you've also got that flexibility of an investor claiming carryback to the previous tax year. So again, for those not familiar with what carryback is, if you make an EIS investment today and the provider like Deepridge deploy this tax year, the income tax relief can be set against the current and or previous tax year. Whereas again, just in comparison with VCT, you don't have that option available. It's 20% for the current tax year only. I mentioned CGT deferral actually on the next slide, so I won't go into that, but here's the main column you need to look at to make for the relevance of this webinar today, focusing on EIS. And we haven't got Flex EIS available for SEIS yet. So yeah, just the focus here will be on this column here. So what are the key features of Flex EIS? And I referred to CGT deferral, which I'll make relevant shortly. So with Flex EIS, investors can start with a minimum contribution of £1,000 per month per fund. This isn't indefinite, and it's not, for a better phrase, it's not like your gym or Netflix subscription where you continue until cancelled. This is simply effectively signing up for 12 months. So investors would need to sign a new application form if they wish to continue beyond this period. So the tax reliefs remain the same with Flex EIS and the traditional lump sum approach with EIS investing, but there's probably one tax relief for me to bring into this now, which I said briefly on the last slide, which was about CGT deferral. So just talking through the timeframes associated with CGT deferral, which is 12 months before or 36 months after the date of disposal of the asset, that the deployment needs to, that the gain can be deferred. So with Flex EIS, if an investor incorporating CGT deferral as part of their planning, it may be best to ensure your client's final 12-month payment in that 12 months final payment in that 12-month subscription falls within that last 12 months of the 36-month window they have for CGT deferral. So to confirm, the tax relief associated with what we do at Deepridge, so that's technology growth and life sciences EIS, which is the the two funds underneath Flex EIS, they are structured as a conventional fund, as what we call it. So you've got two funds on the market, and if you've joined me for previous educational webinars, EIS in practice, as we branded them, I went through the two different types of funds on the market, which are conventional and knowledge intensive, and went through the fine detail, the different tax forms. And a key thing for me to mention here, because it links to deployment of everything I've just mentioned about the tax relief, is they're conventional funds, which means it is when the shares are allocated in the underlying companies is when the tax relief applies to. So if we were a provider that took 12, 18 months to deploy or allocate the shares, then that is a huge consideration for you as an advisor when providing your advice to your client, to look at when is the underlying investment being made. So Deepridge do it monthly, hence we can offer Flex EIS. So with a knowledge intensive fund, just to clarify, it is when the fund actually closes. So you may find a knowledge intensive funds that are open at the moment, you will perhaps make your investment into that and they won't actually close until the end of the tax year. So that's the two, just to distinguish between the two types of EIS funds that are available to you or to your clients on the market. I'll come on to that shortly again with the conventional fund approach of the EIS 3 forms, what that looks like with Flex EIS and how they come back and how that looks on our portal as well. I'll come on to that shortly. So just to confirm, Flex EIS is an investment model, not a new product as such. It accesses the two underlying EIS funds that are evergreen that we have available, which you can see on screen are technology growth and life sciences. So if I may just take a step back from the Flex EIS side and just actually focus on the underlying funds that are accessible via Flex. Both funds are evergreen that I mentioned, so there's no close date to them, as mentioned with the conventional fund approach. The underlying companies may change from time to time, but the fund's technology growth and life sciences will be available to invest in for the foreseeable, as I said, deploying on a monthly basis and then allowing us to do the Flex EIS route. So just to recap on the both, I appreciate you can see on screen what the focus is. So underlying areas with the tech growth fund, starting with this one, which is a hot topic at the moment, which is AI, which are typically B2B type businesses. Companies in the fund currently contain companies for a sort of second and third funding round with us, which are probably moving on to the next stage, which is towards exit. And hopefully in sort of 3 to 5 years is how we position this. Now, coming to the life sciences side, which is focusing on healthcare, as you probably gathered by the fund name, healthcare, medical devices, pharmaceuticals, wellness platforms. So companies in this space will typically go through clinical trials, IP, various testing, etc., to get to the value point of exit. So we position this typically what can be anywhere between 5 to 10 years. So to confirm, both of the funds here are accessible via the Flex EIS investment method. So lastly in this part, due to our quick deployment, I can and will show you in a few slides' time a matrix of companies that are currently open within the funds to give you a bit of an idea as an advisor when you present your recommendation to a client and say, possibly, I'm recommending you make an investment into technology growth EIS via the Flex EIS route. And the client says to you, great, what companies are open in the technology growth fund? And then you can actually show them the companies in the form of a list that we produce on a monthly basis. Now, we don't have that accessible typically on our website, so please speak to your local BDM at Deepridge to get that, which we, as I said, produce on that monthly basis. But I've got that coming up just to show you. Okay, look at the key information of Flex EIS for you as financial advisors, paraplanners as well, and key information you need to look for or questions that you may already have. So what is the minimum investment? £1,000 per month, or if you're taking the traditional lump sum approach, just for clarity, it's £10,000 overall. Now, we work slightly differently. I know I've said that we deploy on a monthly basis, and I'll come on to that with my case study shortly. But once we hit the minimum threshold of £3,000 on account, we will then make a deployment. So, for example, if someone has signed up to the minimum, which is £1,000 a month, so 12k for the year, we will deploy on that quarterly basis once £3,000 on the client balance has been reached. With my case study, I've given an example of an investor putting £5,000 in a month, so 60k for the year. And of course, that threshold will be reached every month. And then technically, providing diversification is available, we could do a deployment every single month for that 12-month period. All of our companies that we have in the tech growth and the life sciences funds have advanced assurance, meaning that that effectively allows us to deploy on that quick basis. Some providers on the market will, which is why they take or can take 12, 18 months, and I'm sure some of you on this webinar have experienced that, is they will raise capital throughout the tax year and then find suitable companies to invest in, typically on that reactive approach. But Deepridge take the proactive approach and have the companies ready and waiting for cash, and we drip feed capital through to them. For example, if a company may be looking for, say, £1 million for round numbers, we will agree to not give that to them as a lump sum, but we will agree to give that to them over, say, a course of, say, 4 to 6 months. Now, who's the target audience? So the ideal clients typically would be high net worth individuals, those that regularly contribute towards pensions or ISAs. And with my case study, you'll see coming up, it would be typically those suffering from taper relief, those with their pension, and those are, as I said, the high earners typically as well with disposable income, because I guess there next becomes the question of what is the next tax efficient vehicle for my client to invest in once the allowance has been reached. So that's when it comes onto the EIS and VCT option. So how to invest into Flex EIS? So it's very straightforward. As mentioned, £1,000 per month per fund. You don't have to invest into both as long as at least £1,000 is contributed. So technically, you could do £1,000 into tech and life sciences, so it's £2,000 a month. The maximum investment, and we're just going by what the limits are related to the tax relief to an investor, is £2 million per tax year, which equates to £166,000 per month, which I'm just trying to work out in my head if that actually works out to the calculation correct. Not sure it does. We'll come back to that. The administration side, I'll show you in a couple of slides' time and how this looks on our portal, and how the EIS freeze uploaded would work, how this would look, how you, as not only the advisor, but also access to your clients as well, would gain access to this. And here's the application process just to show you this now. So to confirm, you can invest into both funds. And I've just got my laser pointer on screen here. And this is simply how we look in the application form. You've got three options here across both funds, the life sciences and the tech growth. And you then also got the further question of what the distribution would be like. So if you're investing, say, £5,000 a month, would you like it split 50-50 or 2.5 and 2.5? Would you like a different weighting there? And then confirm what the total monthly investment is and then the total amount in that monthly period. So we can issue this as a e-application form. So we do produce, of course, PDFs. We can send that to you in an email. I appreciate some clients may not be fully sort of computer savvy if they're elderly, for example. So sending you a PDF version to then print out and do a wet copy is absolutely fine. But we can issue this as a DocuSign, which I'm sure you've come across over the past few years, which is now common when it comes to documentation signing. Now, we can as well facilitate advisor fees. So this is deducted at source. So I'll come on to the deep bridge fees shortly. But if you're taking initial and or ongoing, this is deducted prior to the investment or deployment being made. So the investor as well, just to confirm, can manually send cash across, but the preference would be, I think, for all parties for a standing order to be set up for that 12-month period. So they can actually do it quarterly as well if they prefer. If they're doing the minimum, as I said in a couple of slides before, of the £1,000 per month and accruing up to 3, they can just send £3,000 every 3 months, for example. It's because we and our custodian, Kin Capital, for reference, KIN, do not offer a direct debit service currently. We can raise illustrations as well. So prior to an application form being issued, take into account the advisor fees, and our fees are quite straightforward and they're demonstrated quite easily on our illustration, which I've got coming shortly. But just to give you a teaser, we don't charge initial AMC fees to investors. So that's quite straightforward on the illustrations that we produce. So taking into account your advice fees and then what is the net amount deployed, we can produce a illustration in advance of an application or recommendation being made to your client. So I've got this visual here just to show you how it would work from a deployment basis and also the tax certificates coming through, which with a conventional fund that I mentioned is an EIS-3 tax certificate. So there'll be one per company investment or deployment. Whereas on the flip side, just for confirmation, you do have a knowledge intensive fund where you get one single EIS-5. So this isn't that. This is a conventional fund. There'll be an EIS-3 certificate per deployment being made. So let's look here at the minimum investment example. So quite straightforward, £1,000 a month for the full 12 months, £12,000 per annum. So month one, hopefully you can see my cursor on screen to the left here. Month two, another £1,000 invested. Month three, we've then got £3,000 on the client account accrued, and then a deployment will take place. Another 3 months will do the same, and then the same, etc. Now, typically, just for context, if you're new to EIS, you may be looking at that thinking, oh, that takes some time for the tax forms or tax relief forms to come back. So 2 things on that. The key date is the deployment date for the tax relief purposes. So if capital is deployed, say today, therefore falling the month of June, and then we deploy at the end of this month, that is the key date for the tax relief perspective. So deployment was made in the 26-27 tax year. My client can then claim carry back to the previous tax year. When the EIS free certificates come through, it is of course beneficial. The quicker the better, because, for example, if your client is investing now and carrying back to the previous tax year and doing their 26-27 tax return in January 27, if they do have their tax relief forms back in time, it lowers their cash outlay to HMRC of paying a tax bill. If they've got the EIS freeze in time, they can lower it, present that with their self-assessment and say, I've made an investment, I'm claiming carryback to the previous tax year. Here's my EIS free certificate, give it to the accountant, and then the tax, I said, cash outlay is less effectively. If you get the tax relief certificates after the tax return has been done, you would be paying the tax and then claiming it back once the tax certificates are available. So that was me going off piece slightly there. I think just giving an idea of cash flow perspective and saying, investment early in the tax year is probably better and a more appropriate to the investor if they're doing carryback in particular, getting their tax relief forms back in time. So 3 months is the typical time frame from deployment when HMRC produce the forms. I know 3 months may sound like a long time, but believe it or not, in this industry, that's actually quite quick. And you can see on the bottom there, our average time frame is 10 to 14 weeks from deployment to actually getting the tax certificates back and available. And I've got on the next slide how this is going to look on our portal. So just to confirm, £1,000 a month for 12 months. Once at least £3,000 is accrued on the client account, we'll make a deployment and the tax certificates will follow. One tax certificate per company deployment in this format because it's a conventional EIS fund and not a knowledge intensive fund. So yeah, just that to be aware of. So putting this into practice, here is an example of an existing investor. So this is a real life case study, an investment made via Deepbridge. I've removed any sensitive data for data protection, of course. So the client here, hopefully you can see this okay on your screen, contributed £1,500 per month on this left-hand column. Now, the deployment took place every 3 to 4 months, once between 4 to sort of 6K was accrued. Typically, as I said, this would be slightly less once we've got at least 3, but the client actually expressed interest to sign up for the full 3 years. And just to confirm again, there isn't an option in place to do a 3-month period. It would be a 12-month period at a time with a new application form being signed at the end of every 12 months. Because the client signed up for 3 years, he said, I was happy to do slightly more in the each deployment. So typically 4 to 6K, as you can see. And yeah, the timeframes here, every sort of 3 to 4 months of deployment took place. Regarding the company names, you've got them listed here. And this HMRC logo, once this has turned green or been highlighted, it is then available for download. So you would click on here, a drop down will come and say download form. It downloads a PDF, very straightforward. Just to confirm as well, if you wish, as a financial advisor, you can have your paraplanning admin staff access this as well. We can provide a login to them, but we can also as well open up the portal to your investor. So I'm sure you've all got those clients that are quite hands-on clients that like to see their investments, keep regular updated information. So you can provide information, we can provide the login to them with your approval if you prefer. So I provided another case study, and I alluded to this earlier. I'm just going to go through this again just to help set the scene. So we've given an example of £1,000 a month putting into Flex EIS. We've now got, as an example here, Mr. Singh that will potentially contribute more. So Mr. Singh is an additional rate taxpayer, therefore he's subject to the tapered annual allowance on pension contributions. Due to taper relief, he can only contribute £10,000 per annum towards that pension and is looking for tax efficient ways to invest. So as I mentioned earlier, taper relief, typical scenario that you may come across. What is the next tax efficient vehicle for my client? And you then open the conversations at EIS and VCTs. Mr. Singh's financial advisor suggests investing into an EIS fund. So given his high income and substantial savings, his financial advisor suggests investing £60,000 into the Deepbridge Technology Growth EIS fund. So rather than sending a lump sum, and I alluded to this earlier that Mr. Singh, for example, could come to you at the 11th hour in late March and say, I want to make an investment into an EIS before the end of the tax year and claim carryback. And then your adding to your workload that's already there at the end of the tax year, trying to find which EIS funds are open, do your research, go through your compliance. Whereas we've then got the example here that Mr. Singh would preferably break down his payments over the course of 12 months, similar to what is done on a pension contribution, rather than send that lump sum. So agreeing with the £60,000 investment recommendation, Mr. Singh contributes £5,000 per month by standing order into the Technology Growth EIS Fund, but via Flex EIS. This is deployed monthly by Deepridge and potentially allocated up to 12 companies. So that is dependent on the available diversification, i.e. will we have at least 12 different companies open in the Technology Growth Fund in a 12-month period. So I'll come to that shortly, that I mentioned about what companies we've currently got open. You can see the amount of companies we currently have across both funds. So as mentioned previously, the EIS 3 certificates will come through, so one per company, and they're uploaded to the portal, which can be accessed by, firstly, financial advisor, of course, but also Mr. Singh if you, as advisor, wish, for example. And the typical time frame that I mentioned is at least typically 3 to 4 months, what we're seeing from HMRC produce each form. So at the end of the 12 months, Mr. Singh would need to sign a new application form if he wishes to continue contributing to Flex EIS for the additional 12-month period. So yeah, hopefully that was quite a straightforward way of understanding how Flex EIS works, if you haven't already from the previous case here that I gave of £1,000 a month as an example. So I mentioned about our fee structure earlier, not charging fees to investors. So just to recap and for clarity, there are no initial or AMC fees charged to the investor by Deepridge. We charge the companies after deployment's been made. So the benefit to the investor here is that it maximizes their tax relief on the way in, i.e. if £100,000 goes in and we were to charge a fee to that £100,000, that would lower the amount invested, but also lower, it would lower the amount invested, but therefore the 30% income tax relief that can be applied to that subscription. Now, with our approach, let's assume that you are, as an advisor, not taking any fees from the subscription, so no initial or ongoing. £100,000 invested, the full amount will be deployed, and therefore the 30% income tax relief will apply to the 400. So that is another USP of Deepridge, is that we do not charge initial AMC fees to investors. There is one fee to be aware of on the back end, which is a exit or performance fee. So once a successful exit has occurred, 3 to 5 years or possibly up to 10 years, I mentioned, if it's, considering the life sciences fund, for example, that once at least 20% uplift has been made, we charge a 20% fee. So for clarity on how that compares to market averages, the average is about £1.10, ours is at £1.20 once that performance fee hurdle kicks in. And again, we can raise illustrations to show all this as well if you would like to see that further. So I mentioned about companies that are currently open within both of the funds. So hopefully you can see, I probably appreciate you probably can't see the full detail of the names and what the companies do. So please, after this webinar, if you'd like a copy of this document as a PDF, please contact myself or your local BDMs and we can send this to you. So diversification wise, as you can see by how sort of greater the page is filled out, if you like, for the life sciences side, there is greater diversification in the life sciences fund than the tech growth fund typically, well, at the moment. So yeah, given an example of someone investing into Flex EIS, if they did £5,000 per month, then, let's say slightly more, say they did £6,000 for convenience, and they chose both the funds, they got 3,000 into life sciences, 3,000 into tech, then yeah, given the amount of companies on the life sciences side, they could expect one deployment every month for the whole year period. Whereas with the tech growth side, the capital might accrue slightly more to ensure that that portion of that's been allocated to tech is fully deployed in that 12-month period. So give you a bit of an example of exits that we've had from Deepridge. So our last exit at the top there, I'll probably just focus on that one for now, being our most recent, was Purse Technology. So this was in the Tech Growth Fund, and interestingly, we exited this company just after 3 years. So it's a very fast-moving environment the company was in. It was focusing on green tech as an energy efficiency comparison platform, reducing and managing carbon footprint. So we took this company in at SEIS level, which I'm going to come on to towards the end of this webinar, just as our other offers that are available. So we took the company in the SEIS level, promoted it into the Tech Growth Fund, and then it was a trade sale after 3 years to investors, and it was up to 1.72. The reason why it says up to, of course, is because you had the investors going at SEIS level at different valuation to some of the rounds with the EIS. So the average was around at 1.6. But if you take into account the tax reliefs, of course, then you've got, give or take, a 2x after 3 years, which is great news. So on the slide at the beginning of this webinar, I said the benefits to you as a financial advisors as to why making an investment via Flex EIS would benefit you. A key thing would be ongoing touch points for client communication. Appreciate that you may speak to some of your clients probably once a year, maybe twice a year, for example, but this could be add to the communication or speaking to your clients, potential create more planning opportunities while speaking to them. So there's a lot going on in the market, of course, at the moment with pension changes, the start of next tax year. So that ongoing touch points, discussing IHT planning with your clients, then yeah, that can certainly be a benefit, I think, to you as financial advisors by speaking more to your clients and presenting more tax planning opportunities to deal with the clients that might be looking in this space. And presenting this to your clients as well, it differentiates you because, as I said, with Deepridge, this is a unique opportunity to the market. You can present this to a client. They may have done EIS investments before and thought, oh, I've never come across this before. This is great. So yeah, hopefully it'll shine a good light on yourselves as financial advisors that you've come across this exciting opportunity that a client can actually contribute on that monthly basis into an EIS. So for those on this webinar that have a working relationship with us, you'll probably be aware of the events that we run and also the education support that we can provide. So we do in-person events. We recently have done lunches. We've done just generic seminars. We'd like to do online webinars like today, provide the educational side that we can start early in the morning and allow you to get on with your day, post 10 a.m. On our website, we do have the Deepridge Academy. So if you go to our website, top right, there will be a button to click that says Deepridge Academy. So any educational piece you may need, documents to download, anything that I've discussed today is all available there to access at your own time, at your own leisure. Where there are case studies as well, so do speak to your local BDM about case studies and what we've discussed today. With Flex EIS, we've got case studies available, and of course, suitability wording and full DD packs are available as well. So hopefully, we've got the full toolkit for you as an advisor as to what you may need from us as a provider. So just a couple more minutes, if I may, after this slide, just on our other products, just to keep you informed of what we have available. So hopefully what I've gone through today gives you an overview of what Flex EIS is. So just to recap, Flex EIS isn't a new product in itself. It's a new method, probably an easy way to think of it is a new application form to access the two underlying EIS funds that we have available, which are both evergreen, which are technology growth and life sciences. They deploy on a monthly basis, then allows us to have Flex EIS available to offer that monthly contribution service to your client. So I think something that comes to my mind as well is why this is not on you, I think more of the investors, but why would a client wait right to the end of the tax year before considering making an investment? I appreciate they may have seen their tax bill at the end of January for income tax and thought, right, I need to try and lower that. I can make an EIS investment and carry back to the previous tax year. Completely appreciate that. But if you've got the proactive approach here with Flex EIS on that monthly basis, where you can contribute and drip feed through the EIS-free certificates, present it with your tax return, present it with the client's tax return to lower their cash outlay initially. I'm just looking at a question here. Just going to read this out before I come on to our other products. So just keeping it in relevance to the Flex EIS. As you would wait until there's £3,000 on account until you deploy, rather than leave some money outside of the market for a quarter, do you have other options for quarterly payments? Yes, absolutely. With the standing order, as you know, with banking apps now, a client can. I completely appreciate your question. So similarly, what you may experience with another provider, for example, that takes 12, 18 months, a client could send an application form today and even their cash, and it sits with a custodian, not earning any interest for that 12, 18 month period. Completely agree. And when we roll back to 4 years ago, when inflation was at 11%, 11% of say £100,000 over the course of the year, well, takes it down to 89 in real terms value. and that's 89 on paper that's been deployed. So yeah, completely appreciate your question. So yes, coming full circle back to it, a client, as you probably see with standing orders, you can create on your banking app nowadays as to how often you like or what the frequency of it. Instead of doing it monthly, the client can send it quarterly. Absolutely. And just if I may, so hopefully that gives you the full overview of Flex EIS, what it is, give you an understanding of why we've incorporated it to the market. I just want to bring to your attention the other products that we have available. So of course, we're known as a provider for EIS. We've been around since 2010 as a company. We've got as a company just over 300 mil FUM, which we've predominantly been very strong in the EIS space. So other products that we do have, and I alluded to this earlier about SEIS, we have the UK Innovation Seed Fund. We've got the two BR products, which I'm just going to give 20 seconds on each. So the UK Innovation Seed Fund is SEIS. And to recap, the enhanced tax reliefs investors have is 50% income tax relief on the way in. And then you've got 50% CGT exemption, so not deferral. So this is investing in ultimately startups, whereas EIS is more UK SMEs looking to scale up to that next level. Sometimes confusion between the two. So with Deepridge, startups would go into the SEIS side. Catalyst technologies, we call it. So what we try to do here is take companies in at that level. We either promote the companies then into the tech growth or the life sciences. So it's the understudy to the EIS funds, but of course you're getting the added tax relief on the way in. We do have a tranche open at the moment. We operate slightly differently here in that we're aiming to do quarterly or every 6 month deployments, because we take the approach slightly different in finding the companies alongside raising capital. So we've got 4 companies ready waiting for cash as we speak. So if you do have any clients looking at quick deployment for SEIS, then we can honour that. Business Relief, or BPR as it was formerly known, we have 2 funds available. So the personal one here, which invests fully in UK-based renewables. We're a great diversifier on the market to go alongside the generous funds that do invest in the same subsectors of infrastructure, leasing, lending. I appreciate there's an element of renewables sometimes within them, but you could argue if you're looking at IHT planning or BR investments for clients, you're looking at 6 figures plus. You're probably placing that across 2, 3, sometimes 4 providers. Deepridge could be that second or third option as a diversifier because we're the only one on the market that invests fully in UK-based renewables, which benefit from subsidies. Targeting 4%, we're slightly below that at the moment, but there have been a couple of years that have actually been quite above the 4%. So as we gather traction in the market with our fund, particularly, as I said, towards the pension changes next year, many clients, this is not me providing advice, of course, but many advisors suggesting clients take the tax-free lump sum from pensions and put it into BR assets to keep it IHT efficient. So we're a good diversifier to go alongside other options in the market. And if you want the tax efficient review, Martin Churchill, please speak to your BDM and we can send you that as well because we've got distribution rights to that. We have a corporate solution. So this is for limited companies that have got excess cash held in the business that might be deemed an accepted asset by HMRC. For moving cash from the limited company, if it's a cash rich client, what is deemed cash rich, HMRC loosely have their definition as enough cash for one business cycle. So if it's a company that is cash rich, they could not only qualify their own company for business relief by moving the cash from the limited company into the LLP structure to not only qualify their own business for business relief, but also the investment or the cash as well that's moved to the Deepridge LLP structure that we've set up, which provides short-term loans to social housing developers. Typically up to 12 months, loan to value 70%, but the look-through position is about 54% due to the interest being paid upfront. So we've got this available as well if you deal with any limited companies that are cash rich. So lastly, if I may, just the learning objectives. I've been through what Flex EIS is, why we've launched Flex EIS, because just to recap, we deploy monthly anyway, so why not allow a client to set up a standing order and break down their payments on a monthly basis? Who the ideal clients are, I gave a couple of scenarios. Mr. Singh is an example, 5k a month, suffering from pension taper relief, putting it into Flex EIS. The key benefits, we've been through that. The proactive approach, you as the advisor, ongoing touch points, you can present this to clients. It's unique to the market, it's new. It's refreshing to the market, not seeing funds that take 12, 18 months to deploy capital, have that cash drag, as the question I had earlier about cash sitting on the custodian account not earning interest. Get it invested soon, get it working, get the tax relief forms back quicker for the client tax return every January. They've got a pile of EIS 3s to present to their accountant to lower their cash outlay. I've been through how to invest as well, so I've talked through the documentation that we produce. Very straightforward. Hopefully I showed you that. Hopefully I was very straightforward what I showed you, the box to tick and the weighting as to whether you go into tech or life sciences, what the difference would be. And we can issue that, as I said, as a DocuSign application form or as a standard PDF. I do have another question. Just bear with me if I may before I wrap things up. That was just an answer to my initial question. So yes, good. I'm glad I answered that. So thank you all for attending today's webinar. It takes up to 41 minutes. So I'm just shy of the 45, which is good. If you'd like to discuss anything further, I'm available after this webinar. This is a live webinar. It is just coming to 10:15 on the 23rd of June. So thank you so much for attending. As I said, the CPD certificates will be produced and sent to all attendees within 48 hours. Here is my details on screen if you need to give me a call or send me an email after, but I'm sure you've got your local BDM that you've spoken to or invited you to this webinar, so please contact them for further information. I'm just going to check the Q&A one last time. There aren't any further questions, but if you do have any questions, please get in contact and do see the additional learning content available, as I said, from our website at Deepridge Academy. So thank you so much for joining. Hopefully that was of use. Hopefully we'll all speak to you in near future again, and hopefully you have clients that may be interested in Flex EIS throughout the tax year. Thank you all. Hope you enjoy the lovely weather this week and look forward to speaking to you soon. Thank you. Have a good day.